So why don't you take us to, I don't know how to start this. Take us to capital raising. What are the first few things that people should know when they take the perspective of somebody who's just starting to raise capital?
So I know that your audience is not a ton of beginners, but I just want to first state that there's basically three ways to raise money. One is as debt, and typically that's like a hard money loan. Hey, I'm going to buy this real estate. I'm going to borrow money from you at 8%, and I'll use real estate as collateral for the loan. And if I ever don't pay you a monthly interest rate, you can foreclose and take the real estate. That's like the most simplistic way. You don't have to explain the business plan. You just say, I'll pay you 8%.
Hmm.
The next, like more advanced version of that is maybe that investor says, well, 8%'s not really good enough. I know you're making a killing on this deal. How about we do like 6% cash flow and I'll get half the upside or something like that. So then we go into this thing called a joint venture, which is the second way to raise money, which is like there's two of us. We both have material control and we're both kind of equal playing field or equal seats at the table. Maybe you're doing all the work and I'm just putting up the money, but the reality is from an operating agreement standpoint, we both have seats at the table.
Yeah.
The third way to raise money is where I play, which is the world of syndication, which is now there could be 100 investors and they're investing 50K or 100K each to put down $8 million to buy a $20 million deal. When you start to have like more than, let's say, three or four or five, and certainly 10 or more investors, the SEC, which regulates these matters, because you're such a small investor, you're kind of deferring to someone else's expertise in a material way. And so you're just one of 100, and all 100 investors are saying, this guy, Hunter in this case, is going to implement this whole business plan, and I'm just going to basically defer to him. Now, this isn't the technical definition of it, but that's what most people would consider a security. And when you pull investors together, you're entering the world of securities and syndication, which has legal implications, but it allows you to buy $20 million properties like the one we're about to buy in Phoenix, where there's going to be about, 70 investors.